Yeah, it is. Good eye. Enterprise units is all acres of the hemp in the county go in together, okay? And so that establishes your guarantee, and if you have a loss, then obviously, if you had other fields that did really, really, really well, it could bump you out of the loss. It's cheaper, optional units are the way to go, but I mean, that's my belief, but we could, if you're interested in, you qualify for policy, we could look it through, we'd run some quotes of different options and just see how cost effective they are and what works best for you. Good eye, by the way. Insured causes of loss. So we'll just go deeper into them again. So adverse weather conditions, fire, wildlife, earthquake, volcanic eruption, insects, plant disease, and then failure of irrigation water supply due to an insurable cause of loss. Sorry. Does anybody have any question on these? What they mean? Anybody want to dive into them? Anybody have any experience? Okay. Anyone want to talk about that? Any concerns?
Is that going to be flood that last one if your pipe break and flooded field?
No, failure of irrigation water supply due to an insured cause. That would be if you don't have any water. Your water got cut off. As long as it's linked back to a weather event, like say we didn't get any right. So exactly. So if we had a really warm winter, kind of like what we're dealing with in Umatilla County right now in northeastern Oregon, where there's a lot of flooding right now because all the snowpack is just melting off, and there might not be anything to fill the reservoirs when we really do need to catch and use that water for irrigation. Okay. All right. Non-insured causes of loss are mandatory destruction by, we're going to say, your state. So if it exceeds the THC requirements. So this is where we're talking about. The government sets the standard at the delta 9.3% THC as the standard. That's the difference between if it's hemp or then cannabis, marijuana, right? Hot hemp, whatever you want to call it. But then they also put the language in there that they're leaving it up to individual states. So that supersedes what the federal policy states. Okay? Mold. So mold occurring after harvest is not covered. So we didn't really touch on this, but mold out in the field, or powdery mildew, or whatever it is, which last year we had some huge yield losses on the west side of the Cascades due to mold and mildew, and right? Okay, so if it's out in the field, that is an insurable loss. Okay, so whatever those yield losses or quality losses are from that are absolutely covered and paid for. Okay, which there were some cases guys had 40% losses on yield by the end of it. So that is absolutely covered on the policy. Now, if you have mold or mildew that occurs after harvest, in storage, wherever it might be, if it's windrowed, laid out in the field and sits there, that is not covered. Okay? But that's a big one. That's great. I love seeing that. Not on this side, but failure to follow requirements in the processor contract. Okay, so you're not following processor contract and they don't pay you, that's not an insured cause of loss. And inability to market unless due to a covered cause of loss. Okay, so if there's actually a weather event that you can link back to that it caused damage on the crop or quality, that there's no market value for it, and that's something where you can get paid. Okay? So just really quick, I mean, we're going to go through this fast. You can calculate yield guarantees. If you want to see this and sit down with me about it where we can actually do some examples, let me know. I'm going to be here for the next couple hours so we can go over these things. Just really quick into the crop payroll policy. So we're totally switching gears from a federal policy now to a private policy. So we're put on a different cap. They have nothing to do with each other. They have different regulations. And individual AIPs basically get to kind of build and determine what that policy is going to be, how much it's going to cost, what the rules are going to be on it, what they're going to accept, what they're not going to accept. Government doesn't really have anything, and doesn't really affect anything to do with crop payroll policy. Okay, so they're offering coverage limits per acre of $10,000 plus. It is $8 million by entity cap. Okay, so really, if you had 20 acres, you could put a lot of coverage on 20 acres because you have an $8 million cap. It's individually underwritten prior to the offer, so I'm going to show you an example. The hail deductibles options are an excess 10 or an excess 50. In Oregon, for oil, it's excess 10, which means that you have a 10% deductible, right, on it. Okay? And we can go into that. I'll show you exactly. Perils covered are hail, fire, and lightning. Okay? Wind shatter is not covered in a hail policy. But you have hail, fire, and lightning. Which this policy would have came in really handy for a lot of those guys last year. It would have saved. So coverage ends at the severance of the stock or October 31st. Okay. Crop classifications, we don't really need to go through that, but we'll take a look here. So I didn't hear anybody gasp, but those are real pictures. So the crop hail policy, if you want the policy, obviously I'm going to work with you. We're going to go over and answer some questions. We're going to pull the rates, so by section, township, and range, county, then section, township, and range. We'll look at the rates and see what they are to cover your crop. You're going to tell me how many acres you want, obviously, and what you want to cover in revenue per acre. And then to get the policy, you do have to send either a check, like we'd have to send a check in, or you'd have to provide me with a check. We can scan it and then send it to the company, just showing at least that there is a check in that's going to be in the mail along the way. Okay, right? Okay. There are no cash discounts, and the reason we have to put this in there is because other crop hail policies for other crops there is a cash discount available. Right. So there is a wind coverage, but it's not wind shatter. Okay, so what it does basically is it's going to pay you up to $500 an acre in labor. If you have a windstorm and it blows your plant over, it will pay you up to $500 an acre to come out to pay labor to prop it back up. You know, 500 an acre isn't a lot, but it's free with the policy, so it helps out, right? It's just a bonus, a perk part of the policy. Anything else you want to add on that one, Justin? Because that one sets you guys apart from any other insurance provider.
That's kind of interesting, because that's an insurable interest, and that's when your crop fails, and the insurer's trying to indicate that we'll put some money out there. What if a small farmer doesn't have anything to contribute to that, to get it back up? My point being, that you have to do due diligence to try to protect your crop to whatever degree. Does that mean even if you're trying to put a crop there on that $500 an acre?
It's just a bonus perk. It's kind of like with the fire that goes in with it as well. The other crops, they'll pay you a bonus for like fire department charges if they have to respond to a fire on a crop. It's kind of the same thing. They're just little perks and bonuses that they put into it to help you out. Because we would love to have them cover wind shatter on a hemp crop, but they're not going to do it. Okay. Must meet all local, state, and federal licensing regulations. That's obviously important. So they do have adjustment procedures that has been developed. So just using canola, sunflower, and tomato, it works through not only defoliation, but like wheat or branch separation, and then obviously like full stripping of the plant with stock. So they basically go through all stages of it, even if the plant's severed. They go through all of it to adjust to find out what exactly the percentage per plant is of damage to get you paid on it. Okay. And then obviously we have to complete, and this is one that Justin wanted to stress, is that we have to complete basically a pre-binding worksheet to get approval to move forward. If we do that, that is good for 7 days. So you have 7 days to pull the trigger on a pre-binding worksheet for crop hail. If you decide and that 7 days lapses, you'd have to fill out that form all over again to do it. No? Just resubmit it?
Well, just basically talk to your agent and say, hey, I'm still thinking on it, and then your agent sends me an email say, hey, can we get an extension on this entity? And then we just see, because we have a per farm and per state cap of liability that our reinsurer will accept. And so we want to make sure that we don't have so many approvals out there that if all of a sudden they all pulled the trigger and bought it at once, we would go over our state cap.
Right.
So we're just making sure we stay under our state cap. So we give you a week to decide, and if you don't decide in a week and you say, hey, I want to think on it a little bit more, just tell Dylan, and then he'll email us, say, hey, we need another week extension, can we get it?
Right, I think that's something great to have on file, because then at that point, then all we're doing is filling out an application, having you sign it to get it in for binding, right? So all that, the rest of that is out of the way. So
2-hour binding.
right, so we have a 2-hour binding, so if you have that all submitted and it's already in the system, then if you feel like you see you're watching the weather and you say, hey, tomorrow it looks like it might storm, you call me up, you sign the application, send it in, and you have 2 hours, and within 2 hours you're bound on that policy. So, let's see. Yep. So what's not covered is loss due to mandatory destruction of the crop due to high THC levels in excess of local, state, or federal maximum levels, which obviously reads in state, which is total THC. Loss due to failure of the crop to meet minimum requirements of the processor contract or inability to market the crop. That's not going to be covered. Damage caused during transit, damage caused during storage, damage associated with wind shatter, which we already went over that. Damage while the crop is in windrow. So yeah, that's one thing I should just establish is that severance of stock, right? So if it's in the windrow after it's been cut, just laying there, if a hailstorm comes through, it's not covered. That damage is not covered. Theft or damage to nail plants or acreage going solely for harvest of cannabinoids. Okay, so what? Just
I don't know if we had this in there or not, but also October 31st, end of coverage.
yeah, it is.
Okay. That's a big one because I saw people in the Medford Road Valley here, they were harvesting well into November.
Yeah.
And yeah,
So just keep in mind that it's severance of stock or October 31st.
okay. Typically, you don't have hailstorms in November, but I mean, we've had some pretty weird weather the last couple of years, so I guess you never know.
That would really be applicable to the role.
Right, which this is hail policy only. We're not talking about mold at all, right? Okay. And I agree with you. I mean, is that something just feedback wise? Would you guys, if the hail policy could be extended to November 10th or 15th, would that make you feel more comfortable about it, or really there's not a huge concern for hail in November? Okay. That's kind of what I'm saying. All right, so really quick, I promise. We'll go through e-weather and then I'm going to get Josh in there. So we also offer a private product, which is e-weather risk. So this has nothing to do with the federal government whatsoever. It has nothing to do with crop hail, okay? So basically it's a weather index policy. So basically what they do is they're going to take weather stations by county. They're going to want to know where your fields are in location in the county. They're going to take the weather stations, know what weather stations are in that county, and basically set up triggers, okay? So off of historical data. So if you have, just really to explain it, so if you have a field that the value of that crop is, $1 million, and if you feel like with one of their excess heat policies, which is in here, I'll just go to that page. So like an excess heat policy that they have. So say that there's a trigger. That window is if it's over 90 degrees for so many hours, that's really going to damage my crop at a certain time of year. You can basically set up a policy where you cover from that period of time. Okay, and you can say is if basically if it goes over that trigger of that 90 degrees marker, it's causing so much damage in revenue. Okay, and realistically, that policy has nothing to do with what your actual crop does in the field. Okay, it's all off of weather. Okay, so if those triggers are affected or come into play, then you automatically get a payment because they're from NOAA weather stations. Go ahead.
I have a question. So I would love to know how is the data that sends each of these parameters of damage from him published? Like, do you guys have like a sheet? Because
They don't care about the damage to the hemp.
Or I meant what do you classify as excess rain
Right.
for a harvest? Like, what is your because there's so much discussion about how much planting rain is allowed. What is high heat? Okay,
so this is an example. This will probably help you out. Make a little more sense. Okay. So this is for excess precipitation. Okay. So this is an example from Kansas, which is kind of bad. But see here is the average, so they went back and pulled all the data, right? The start date is 9/10, so you have your average precipitation is 3.4 inches. The wettest year on record was 14.2. The payment trigger is 1 inch above. That's what you're wanting. You're basically, with the working with them, setting the triggers of what you think will cause a revenue loss on your crop, okay? So the payment trigger would be 4.4 inches.
Well, you're saying we said this is our adjuster.
No, with you're gonna set with your agent. We're
Our
gonna
agent, yeah.
right. So we're gonna do basically we're gonna do a quote. They're gonna ask a bunch of questions about what affects you, what hurts you out. So all this data has been. It's not exactly established to kin.
That's what I'm asking.
Right, it is not-
It has
no,
nothing to do, it
no.
has to do with my
No.
condition, like I'm only gonna pay for 2 inches above average. or
Right. It
3
has.
inches.
It really.
It has nothing to do with hemp as a crop
No.
in terms of what it requires.
Nope.
So you're just setting these with your.
You're setting these parameters. Yep. Absolutely. It actually has nothing to do with the damage of the crop itself.
Or the, I meant like the known.
Yep.
growing
Yep.
requirements.
Exactly.
Okay, just.
Yep. So really, they're going to ask. So that's the thing. Like I went through a lot of these last year, and so like frost and freeze at a certain time period or excess rain, like right before harvest was a big one. And so they would ask us that we'd be working with you, whether you say, well, what does the grower want to protect against? Like what scares them? What are those triggers? Right? Those parameters. What scares them on that? And then they go out, build a pulse, pull all the weather data in, and then they say, okay, well, we're going to set these triggers at this mark. Right? So it's really as simple, really as easy as that. So like with this, back to it doesn't have anything to do with the actual crop itself. Okay? So that's the thing was you could technically have damage on your crop in the ground, but if the weather stations didn't trigger a loss from those triggers marks that you have, then you're out of it too, but it works the other way as well.
Sure.
Yep. Okay. So on this one, obviously you have a total coverage paid at 14. So that's on the wettest year ever. You would get obviously a total payment. Okay. So the total coverage is 460,000. So payout per excess of inch is 47,817. Okay. And that just is all coming from these numbers. The 14 with the 4.4 is your first payment trigger. Okay. And then so these are kind of some rates that you can look at as you go up on inches, so like it's basically you're talking that's a deductible, then the premiums are going to go up a little bit, okay? So premiums on this, or you have a premium recovery, what it's telling you is that at 5.16 inches of rain, which the average precip is 3.4, at 5.16 you would recover back all of your premium, and then anything over that in precipitation would be profit, right? To recoup that revenue loss. Okay, so that's that one's kind of more specific. If you want to look at some actual numbers, we can go over them. I have the sheet where we can actually play with some numbers in there if you want to look at that. And then I do appreciate you guys taking the time. I'm going to skip the predictus part, parametric part, and let Josh talk on that. Does anybody have any questions? Back on the federal policy? Yeah, go ahead. Crop hail policy?
My question is, like Missouri is going to allow hemp for the first time.
Yep.
So basically, you're not going to be there, and you're going to have. Is there going to be other policies available?
Yes. So e-weather is a policy that's available if it works right for you, if it fits and it works right? So if the weather reflects something that would be a good policy, and that's just by taking a look by county basis and see if it's a policy that's actually going to work for you and make sense. The parametric system is in all lower 48 states.
Yeah,
right?
for that. Yep.
Yep, so that's a policy that would work for you, and Josh will be talking about that. The federal policy, obviously, if this is our first year, nobody's going to qualify for it, right?
Yeah.
But a crop hail policy is absolutely available. Yeah.
So on the fiber side, would there be a coverage for heaving, for blowing it down?
So there's no wind shatter. You would be paying for a crop hail policy, and you would actually get the bonus of, if it blows over, you could get the bonus of up to $500 per acre to stand it back up, right?
That you wouldn't stand fiber across back out.
Right. I don't know. Does it depend on the time of year if it blows over?
Well, yeah.
Yeah.
See, in Missouri, I don't think of it gonna be the CBD type. It's gonna be more of the, like wheat, it's gonna be.
Yep, absolutely, yeah, and they've been doing it. There's been other areas that grow it like that too, where they direct seed in, and it's really spindly, right? And just, yeah, it looks like a wheat crop, or, yeah. Sort of, kind of, sorghum, yeah, oats, I guess. All right, any other questions? If not, I'm gonna let Josh get up here and go over it, and then pick your guys' brain too on it.
Yeah, I got one more question. So you're talking about multiple perils. We talked about hail, so a hard wind, a hard rain comes up. And it rains for 2 or 3 days, then you get the mold. So it's only ensuing, you're seeing ensuing damage. You don't care, of course, if the rain caused it. We're looking at the loss from the mold. The rain and the heat can cause the mold. And I know you covered multiple kinds of losses there.
So on the federal policy, absolutely. So if you get mold and it's due to a weather event,
That's another year down the road. You do not have that available to us currently.
not, well, you have it available in one county, not next door county, right? But yeah, so, and if you have if you have a prior year, then absolutely, you could get the policy right now. You could, and it's, you're covering all weather events. That hypothetical you're talking about happened last year. We just went over that with all the mold and mildew. And that's, yeah, the policy, the APH policy, the federal policy would cover it very well.
And guess what the next question is? Is it affordable?
Yeah, it is, right now. So that's something where we would go over that. If anybody's interested in looking at it, we can go over that. We can run some quotes. But it is, at this point in time, yes, it is affordable. Especially with the 55% subsidy at the highest level of coverage, right? So, yeah. Nobody else?
Anybody else?
Thanks for asking. Okay, Josh, I'm going to let you go.
Thanks a lot, Dylan.
Thank you, guys.